Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so in this video here, as you saw in the title, I want to give you just a quick little market update, what's been happening as of today. And then also guys, I'm going to teach you guys something that you can start to use in your trading right now today of how to recognize a sign of an end of a trend, or at least a short-term end of a trend, and how to identify that in the move, because that's actually what there's a lot of the silver and gold silver and gold and stuff like that. Silver and gold stocks have been signaling this, and I'm going to share that with you so you can identify it in real time, how to identify that when the market's starting to slow, when we may be getting a potential, even just a short-term reversal, not a long-term reversal, but a short-term reversal in that. So I'll be sharing with you that. Guys, if you haven't done so yet, then make sure you click on the link below or go to John's Flash Sale to grab the $7 trading course. That's going to teach you the foundations, 3 amazing, powerful chart reading techniques, 2 amazing trading systems, mindset, and more. So johnsflashsale.com. Let's go straight into the Dow Jones, and let's actually see what actually happened here with the Dow Jones. Let me bring up a candlestick chart here, and I'll bring back the black charts here in just a minute. But let me bring up the candlestick chart here. All right, let me zoom right in. Excuse me. And so what are we looking at here, right? What do we have here? We've had a nice little move up. We've still had a very, very small little up candle. As you can see, right, very, very, very volatile through here, and now we're starting to break up just slightly. So it'll be really interesting to see whether we do continue to break back above the 27,000, go for another run, or not. So that's what happened there with the Dow Jones, S&P as well too. So we're just breaking back above the 50 as well too. You can see how the S&P 500, it definitely found a lot of support, like major support around the 62% Fibonacci level. So strong support. It actually once, twice, 3, 4, 5 times to try to actually break below that 62% Fibonacci, and then and now we're breaking back up again. So that's actually a pretty strong sign for all the buyers. And the way that this is looking right now, we have a very good chance now of breaking back up to all-time new highs. If we go have a look at the Nasdaq, I think, let me actually do the Fibonacci from the Nasdaq as well too. Where did that go? There you go. Same thing with the Nasdaq, right? Look at just around that 50. This whole level here was the 50 to 62% Fibonacci level. Found a lot of support, and now we're breaking back up. Now, what I like to do sometimes, guys, is to see where momentum is, right? So we can see how the market ran up through here, and then it had a pullback, right? So now we're looking at this as more of a, where are the buyers in this level? And you guys, you can see, right, it found support all through here on the 50 to 62% level, and now it's breaking back up. So sometimes what I like to do is see where the momentum really is. Is it more for the bears or more for the buyers? This is for the short term anyway. So I use a double Fibonacci, okay? Now what I mean by that is this, right? So this one here from low to high, okay? And this level here is to say, okay, this is buying momentum. If the market holds support and continues up, that's buying momentum. Then I want to flip it on its head to do a double Fibonacci. So I'm going to go from the high to the low, high to the low, and then I'm going to do that there, right? And then I'm going to draw a box around it, right? So I know that is the 50 to 62% level, right, of the selling side, right? So we have this drop down. Now, if the sellers were strong, they would hold the 50 to 62% Fibonacci level, and they wouldn't let it break up, right? It would actually hold it, and then it would break back down. With me so far? So this whole level through here is what? This whole level through here is a more of a selling to see how the sellers, if the sellers are keeping it down. This one here is the buyers, as you can see, breaking through. That means if we break back up, we continue to break up, we're probably going to run up to all-time new highs, and then continue running from here. See that level through there? So this is what I call, it's a little thing that I learned a while ago. It's a double Fibonacci. Yes, this is the buyers keeping it up, and this is the sellers keeping it down. Where's it going to break? Where's it going to break? Where's it going to break? Bam, break up. Okay, cool. Buyers in control. We're probably likely to keep now breaking up to all-time new highs. Again, this is just a short-term little pretty cool tool you can use when reading the charts. But I like to use to see, where is momentum? Is the momentum shifting? Because if momentum was shifting, then you'd see something like this. You break it down, then the sellers, the 50 to 62% of the selling side kept it down, and now they're breaking past the 62% Fibonacci from the buyer's side, and now we're just doing that. So Excuse me. So that's actually something pretty cool. Now, so that's what's happening there right now, guys. Let's go have a quick look at silver and gold right now. So looking at gold, we're having a bit of a short-term pullback. I still see a bit more of a pullback, and then same with silver as well too. Bit of a short-term pullback, but I don't see a big pullback coming, but still a bit more of a short-term pullback through there. Looking at that weekly chart, you know, that $1,700 level is definitely a major significant level, especially down that 1,700 to 1,650. So if we do continue to get a bit of a small short-term pullback, it's probably going to be short-lived especially in silver as well too. So that's what I'm seeing there, guys, with gold. Oh, sorry, with the Dow Jones, and I'm also seeing with silver and gold. Now let me teach you about that end of trend indicator that I was telling you about before, or what can happen here. Okay. So let's actually bring up this. Let me bring up the SIL here for a minute, okay? Now, the market moves in highs and lows, right? So as you can see here, if I bring up, all right, so let's look at this here. You know what? This is actually a really good point. Let's actually go back to here, okay? So if I bring up back here, okay, and this is where flowing with the market is seeing what's going on here, right? So what do we have here? We had this was a high point through here, then it came down, made a lower high, made an equal high, then it ran up, made a higher high, higher low. So when this is happening, who's in control through here? Higher highs and higher lows, buyers in control. Lower lows, lower highs, sellers in control. And then the buyers, then what happened here? We had another made low, didn't we? We made another higher low, then we ran up. Then it came down and created this lower low. Now that is the first warning sign, because what's in a downtrend? A lower low is a downtrend, right? If the buyers are raising their prices, that means we're still in an upward trend and the buyers are still in control. But if we break a lower low, now all we need is a lower high, breaking past previous lows. This point here is where the sellers are definitely in control. Makes sense? So this is a warning. This is a warning sign that the sellers are likely to come back in and then kick it back in and take it down. And as you can see, right, we actually had a very nice selling off rifts. Now, you never know when that's going to be. This move could only lasted from here to here, and that was it. And then they took it back off again, right? This is about just understanding short-term movements in the markets and identifying that. Makes sense? So if we have a look at the market right now as we speak, what are we seeing through here in the markets? We have a low, have a high low, high low, high low. So this still could be some sort of higher low right now in SIL, right? So is there any sign of even a short-term end of trend? Now this thing through here is what? Just a pullback, just a pullback, just a pullback, just a pullback. So right now we're still experiencing what? Just a pullback. Is it a sign that this daily end of trend is coming to an end? No, right? There is no sign there. Let's go down to SILJ. Same sort of thing, right? Higher low, higher low, higher low, and higher low. Let's go have a look at the JNUG. So now what are we doing? Now things are changing. Why? Well, let's have a look at this here. We had what? We had low, higher low, higher low, higher low, and higher low, okay? And as you can see, right? But as you can see, every time it made a low, it broke past previous highs. Made a low, broke past previous highs. Made a higher low, broke past previous highs. Came up, came down, made a higher low. Notice how it couldn't break past previous highs. And now what is this here? This is what? This is what? It's a lower high, right? And now we're breaking past previous lows. What does that mean? This whole upward move now is slowing, and now the sellers are starting to take control. As of today, the sellers are now in control. Short term, that is, okay? We never know short term it is. I don't believe long term, but when we talk about trade the markets on a short term, this is a short term movement. So from this here, right, you can see here we had a higher low, then a lower high, breaking past previous lows. This is where the sellers are in control. If I go and share with you the GDX, right? Look what's happening with the GDX right now. We had what? We had low, higher low, higher low, higher low, higher low, and this is pretty much now a double bottom. Notice how the bottom now is it's actually equal. This is the very first time we had an equal low. So we have a bit more downward movement. What is that? Lower low? Then what could we get? We could get a little rally up, right? Lower high, and then it continued falling through. So if we go look at, say, something like the transports, right? And I squeeze this up, so I share with you what I'm looking at here. Let's go to the weekly chart here. All right, so it's just much more easier for me to share with you here. So what do we have through here? We have what? High, low, higher, low, higher, low, higher, low, higher, low. Why are the high lows important for us to understand? Because that means the buyers are still raising their prices, right? The buyers are still coming in. Then we came in. What is this here? This is a what? A lower low. Okay, cool. Then it made a lower high, breaking past previous lows, and we had a very short-term sell-off. Again, you never know how long that sell-off's going to be. But again, this is just a short-term movement. And on that daily chart, you'll be able to see it even more. Right? You can see how this here was the last low that came down, made a lower low, came up, made a lower high, and then we had a nice sell-off. And then the market came back in again. Okay? Again, this is not identifying an end of trend and that's going to last for years and years and years and years and years. Okay, this is just about some short-term movement that happens in the markets there. Now, one thing I also want to share with you is how the market starts to, how we can see the market starting to slow in momentum. So what I mean by that is this, right? Is that if the market comes up, makes a high and comes back down, right? This is a high. It generally breaks back up, comes back down, finds support, comes back up. Finds support, comes back up. Makes sense? So each high, this resistance is now support. Resistance is now support. Makes sense? So when that happens, the buyers are very strong. This is a strong upward trending momentum market. We get pullbacks, yes, but it's a strong upward trending momentum, right? So what do we have here on the GDX? This is a high, this is a higher low. This resistance became support. This resistance here became support. This resistance, what happened? It broke up, just went sideways and broke back down. What does that mean? Is that the same there or is it different? It's different, right? What is it? It's a, let me just do this here, right? It's a higher low and then it's that. And then it's break back above. It's just to get back above the highs and then it struggles and breaks back down. What is that saying? It's saying what? Slowing of momentum. So as soon as you started to see that close below that level through there, as you can see, right? Actually, I'll bring up a trend line. And I'll zoom this in much more closer so you can see. Let me see if I can bring up a candlestick chart. That way you may be able to see it just a bit more clearer on your end. All right, there we go. All right, this is on the short term. So look at this here, short term. So you know what? Let me do this. Let me erase everything off the screen here, so you can see what I'm saying here. Right. So what? Resistance becomes support. We have resistance becomes support. Then what do we have? We had resistance, but what happened through here? We had that resistance, but what actually happened? Resistance came back up, just struggled, just struggled, right? Didn't even follow through, and then we broke back down. What is that signaling here? Slowing of trend. And this is what we call a false breakout, right? Because it broke back above previous highs, didn't go anywhere, and broke back down. So as you can see, right, strong momentum. Oh, it's struggling, break back down. This is now what I call the first sign of the market now slowing of momentum, and now likely to see a reversal. And then and so it's a false breakout there, right? And you generally get that after around about 3 stair steps to market, right? Because the market generally goes in 3 phases. And what I mean by that is this, right? We have the market move up, and we have, this is the first stair step, second stair step, and generally the third stair step. 1, 2, 3. Generally on the third stair step, that's when the market's pushing it, and it needs a bit of a breather, and then we get some sort of false breakout down. We may get something like this for a while, and then it continues back up after it's had a bit of a breather. Make sense? Now, this is the short-term thing, but the market generally goes in 3 phases. That's where I personally love trading, and I've heard a lot of successful traders talk about this. The first or the second stair step is the most highest probability trade when I'm trading. Now, I don't just trade based on this, guys. I have my pattern, I have my setup that I look for. But when I am trading and I see that this is the first or the second stair step in this entire move up or move down, either way, right? Lower high, lower high, lower high. Generally, the first and the second stair step are the most powerful. The third stair step is likely to be some sort of end of move, and it's probably likely to peter out or slow down really, really quickly compared to 1 or 2. Just like you see here, right? First stair step, second stair step, third stair step, it just struggled and false breakout and broke back down. So if you're identifying this in real time, You say, okay, look what's happening here in real time, right? Being flexible with the market and doing this. Now, again, guys, this is just looking at the daily chart on the short term. This whole false breakout and a little downward movement may last a week, and then the buyers come back in again. All right? It might last a few weeks, and then the buyers come back again. That's why when you're trading the market, you look at the short term, but you also look at the long term as well too. Now, the long term, right? Long term, I'm actually expecting, because we've been going up for quite some time, to have a bit of a breather, right? A bit of profit taking, so on and so forth. So it actually makes sense. So the long term says we're going up for quite some time. So a bit of a profit taking is expected. And then we're starting to see what? Now you're combining it with the short term, the daily. It's like, oh, false breakout. Now we're starting to back off a bit. So we could expect to see some what action? We could expect to see some lower low, lower high, breaking down for some short term anyway, not long term. And then until we get to some significant areas from that weekly chart. Now, what is the significant areas on that weekly chart? The significant areas on that weekly chart are probably around that $25 level there, or using Fibonacci levels, I would say. So there we go there, right? So that whole $25 level there is probably where it's likely to start to go down to. But as you can see, right, it's just a short-term move. When we're zooming in close here, what are we seeing? We're just seeing the short-term chart, right? So a short-term move. Squeeze up a little bit. Okay, so it's probably have a little bit more move to go. It may or may not. And then this nice healthy pullback. And then that's this pullback here, guys, in the overall big picture thing is what? It's just it refueling to go for another run. But what we're doing on the daily chart, right, we're seeing when the momentum is starting to shift. So if you start to see the momentum starting to shift and you're trying to go long the market right now, you're like, hang on a minute, hang on. The market, they're not raising their prices. We just had a false breakout. We're having a bit of a pullback right now. Now is probably not the best time to go in because we've had 3 stair steps. It's actually had a false breakout and so on and so forth. So you're identifying yourself if you're looking for a short-term trade, which means you're looking to get in and get out maybe within a couple of days, or maybe 2 to 5 days, or maybe a week or two. You say, hang on a minute, it's slowing down. The market's telling me it's slowing, so now I should back off a bit. So I hope this helped you out, guys. This is what you should be doing here right now, and this is the stuff here, guys, that's so important for you to read the markets. And again, in my trading course, johnsflashlight.com, you learn things like this: 3 powerful trading techniques, 2 trading systems, and so on and so forth. So go check that out. Have an amazing day, guys, and I'll speak to you soon.